Everyone, this is Henry Imes from PayStream Advisors. Today's session, 5 ways to be an AP hero and how to do it before year end. Oh, we only got a few weeks left. And the tools to do it. My name is Henry Imes, and I'm going to be the moderator for today's session. Delighted to have some guest presenters on our session today. Give you some insight, well, not just about accounts payable, but a little bit about Treasury, a little bit about our research, and some new reports that you can have access to from our sponsor, BancTec. So for those of you who are not familiar with PayStream Advisors, PayStream Advisors is a research and consulting firm. We're based in Charlotte, North Carolina, and we publish research around automation, best practices, benchmarking of purchase-to-pay processes. As analysts, we study technologies. As consultants, we put it into action. And, well, we're trying to bring the best of both worlds today, combining our knowledge with some knowledge of some industry experts, which I'm going to introduce now. As you can see, my name is Henry Imes, and there's that smiling picture of me. Must have been a very happy day. I look very happy there. I'm also delighted to be joined by Michael Alfonsi and Sean Neal, both directors and vice presidents of BancTec. But first, before I get into their bios, I want to have a little bit of insight from you. I'm going to do a little poll question here. So tell us, which of the following items do you think could provide you with the most improved visibility? Personally, you, how can you gain greater visibility in your organization? What would make you more of a hero? That's our topic today. What would make you more of a hero inside of your company? And while you're thinking about that, I want to introduce two speakers. Mike Alfonsi is the Vice President and Managing Director of BancTec Financial Transaction Services. Mike has 28 years experience, and, well, he's a banker consultant. He's also a professor. He teaches at business school to MBAs and graduate students. At BancTec, Mike is responsible for payments and transactions, so we're going to be leveraging his experience around business process outsourcing, but also around transaction management and the strategy that you need to take to bring efficiency to your operations. Sean Neal is a certified accounts payable professional, comes out of that world as a accounts payable manager, and he's got more than 15 years experience, including a manager of AP operations, and more recently, Sean has been responsible for the full suite of purchase pay solutions at BancTec. So he helps set up new clients at BancTec's accounts payable business process outsourcing service. So now that so many of you have voted, let me share the results. All right. Well, it looks like the top vote getters, gentlemen, is reducing AP fraud, monitoring benchmarks, and improving analytics. We get a 3-way tie. And, well, that's unusual. And, well, less of the people wanted to think that they were going to become a hero around lowering payment fees. So we got a lot to talk about. That's great. Let me hide those results and tell you a little bit about BancTec. Let's hear from Mike to give us an overview of BancTec.
Good day, everyone, and thank you for the opportunity to be with you to share this information, and we'll tailor some of our time and comments to the poll results as well. And Henry, thank you for hosting this and for conducting the introductory poll, and for everyone who contributes to the organization with knowledge and thought leadership. It's a great organization and industry to be in as we work on accounts payable, accounts receivable, working capital, the Treasury interface, and work to improve our organizations. And in improving organizations, that's really what BancTec's been about for over 40 years, headquartered in Irving, Texas, but also with a strong presence in Europe. BancTec is a lot about financial process services, things like remittance processing and accounts payable processing, and a full suite of P2P solutions, as Henry mentioned. Electronic document management, particularly services like the complete management of an inbound mail center, or the complete image capture and archive capabilities of all documents, or even in the healthcare space, things like explanation of benefits or EOB processing and claims processing. And then in the F&A space, or the finance and administration space, particularly the whole payments processing bailiwick, with the AP and the AR side being things that we really focus on. A lot of folks use our hardware or software and process on their own. We call that in-house solutions. But then about 8 to 10 years ago, folks asked us to take the work over for them. So that took us into a full line of business process outsourced services, and again, predominantly based in the U.S. So that's a good, strong culture of leadership with both hardware, software, and then performing the processes themselves. So thank you for that, Henry, as we move on.
Wonderful, thanks. All righty, well, let's get to the agenda. When we think about the agenda, well, it looks just like the poll question. We're going to be talking about fraud. We're going to be talking about risk, benchmarking. And I think some of these topics you may have heard before, well, definitely got a new twist. And I know Mike's got a lot to share with you around payment fees analysis. You know, when we think about stepping out, we're trying to empower you as AP professionals to be better. So let's move into our topic of fraud. Now, Sean, when we think about fraud and your experiences at Boston Scientific, what do you think the best practices are around fraud? And this is one that we don't talk a lot about because it kind of gets swept under the carpet. What does an AP manager need to know about fraud today?
Thank you, Henry, for joining us. Well, I think when you look at fraud and how AP can be a linchpin in detecting fraud, it goes side and side with Sarbanes-Oxley, and specifically SOX 404. You know, how you're looking at mandating internal controls. Most companies have done a good job with the blocking and tackling of that, especially around documentation, control procedures, separation of duties, and auditing payments and sampling. However, one of the things that you look at, that may not be looked at, is vendor master. You know, in my experience as a practitioner, vendor master is one of the areas that is least looked at, but is ripe for fraud because there's duplicate vendors. There's the way to add vendors into the system without checking if they are a legitimate vendor. So that's where you look at fraud. So if you go back to, you know, the Associated for Certified Fraud Examiners, you know, 7% of annual revenues could be have fraud in them. And when you look at GDP for 2011, it's a staggering amount, which can be close to almost $1 trillion among organizations. And then when you look at the study even a little bit more closely, 23% of that fraud cases is reviewed was related to invoices with a median loss of $100,000. So it doesn't take a lot of invoices or a lot of instances for those dollars to add up. So when we have four stages that from an AP standpoint, you want them to take a look at. So you want to look at, you know, one of the things that we look at is like just pay attention to the fundamentals. And we talked about SOX 404 and vendor master. That's one area that people can look at. But training the staff to spot and report red flags are important. Think about this. You know, there's just little things that could raise flags within the organization, and if you train your staff appropriately to be able to identify these areas, it can help reduce or eliminate fraud at your organizations. Like some examples would be, you know, changes in the vendor input process. You know, they're shortcutting their normal procedures or sidestepping documentation needed for vetting a vendor. Expediting payment outside the company normal payment terms. That may be something that may be looking like cutting a manual check rather than, you know, they're set up for ACH wire payments or ACH electronic payment or wire payments. And all of a sudden you're getting requests for paper checks, or they're changing their banking information and no one's verifying that. Just look like things like changing simple ways, established ways that things are getting done. Like, for example, you know, people usually use email and a remit to address are being changes, and there's no verification on that. Look at, you know, you want to be able to actively monitor and do test controls. You know, there are, you know, there's a lot of ways that, you know, controls that are in place but don't have stop, you know, Johnny from doing a second signature on a check or publishing an approval without that being their signature. You know, and this goes back to manual processes. And I'll get that a little bit more into the risk area in a moment. But in my example, when you look at fraud that we were aware of when I was a practitioner, was up to $250,000 by one individual, because they were not only using their P card for purchases, but they were then using a paper T&E and forging their manager's signature on the T&E. And so you got to look at, you know, when you're looking at reports and saying, you know, Johnny, you know, why is he spending $250,000 in travel and expense? His role doesn't really belong in that. So he shouldn't be spending that much money in his role on a yearly basis. And then you just want to be able to set the right tone, you know, making sure you have hotline set up. You actually, you know, investigate appropriately, and you take the appropriate actions where need be. And really what basically here is you don't want to be a statistic in next year's survey. So taking these four little steps is a way that AP can help deliver comprehensive fraud detection without breaking the budget. I mean, they're simple to implement, and it's a safe bet that you'll be avoiding becoming a statistic next year. And I think that's what you're looking at, a way to become a hero within your organization. The best way is to stay out of the newspaper. So fraud is one way you can get your organization in the newspaper. Implementing these four basic steps can help eliminate that eventuality there. Henry, we can move to the next slide.
Yeah. Now, Sean, you know, as we think about these concepts of fraud, you're giving such basic, you know, great advice about how to do this. How do you put it into action, and what are the other kinds of things that create risk for us as an AP manager?
Well, so I think that's a great. I think that's a great segue into our AP risk. When you look at risk, you know, especially in tough economic conditions, you know, there's always the eventuality for risk or the potential for risk, and as a goal for an accounts payable, we wanted to eliminate those risks. And there's five major categories that we've kind of put these areas in, and one is standardization. And when you think of standardization, it's one process for everybody. It doesn't make a difference if you're the supervisor on the manufacturing floor, or you're the executive assistant to the CEO. You know, if there's a process in place, it's one process. I mean, it's a standardized process. It's one process, and you move forward with that. And if you have an organization that has multiple processes by function or by division or by individual, that you're just opening yourself up for risk or the potential for risk there. So that's why standardized processes, I think, helps tremendously to reduce risk. Optimization. When you're looking at optimization, you're looking at eliminating waste. And again, waste, if you have a lot of waste in the process, it leads to inefficiencies. It leads to ineffectiveness. It can lead to people not doing their job correctly. You know, they're doing 15 things to get something done. They may, because they need to save time, it's month end, quarter end, or end of the day, they might overlook something, and that has a potential for risk. So if you have multiple tasks and you have a lot of process, a lot of waste in the process, it adds to that the ability to have risk. And then when you look at automation. And automation, what you're trying to do here is you're definitely looking at removing the manual signature card, for an example, on an expense report or on an invoice. When you have automation and you're doing electronic signatures, you're no longer asking your AP organization to be signature card experts. And so you're getting an approval from that person because you have the safeguards in place from an audit trail from their computer, that it's, Sean Neal is signing off on this expense report, or Sean Neal has signed off on this invoice. And then when you look at continuous process improvements, this is a great way to identify gaps, not only in your process, what's standardized, but making sure that everyone is doing exactly what they said they are doing. I mean, I have an example where we were moving to an ACH process. So we were converting from, the goal was moving from 100% paper checks down to 30%, and we were going to get more of our vendors being paid through ACH. So we were looking at all the different units within the organization that had access to print checks, and we went through the whole processes. And this one unit that was doing this, and they were doing paper checks. They were converting to ACHs. We were asking about positive pay. We were doing the whole communication with the bank, and lo and behold, we found out for the past 2 years they haven't been sending the positive pay file. They thought they were out of SAP, but somewhere in the way the transmission got broken, and no one reported it to the organization, either on the bank side or within the organization. For the past 2 years, we didn't have the protection of positive pay. And Michael's going to go into a little bit more about positive pay and the benefits of that. So that's what continuous improvements can help do. And then certifications, spending money to train your folks to help, either in, certified accounts payable professionals, certified fraud audit professionals, I think is money well spent. For every dollar that you're going to put into training, you can see 3 to 4 or 5 times coming back, and that money not leaving the door. As the example at the beginning of the presentation, where if you have $100,000 of lost revenue due to fraud, if you invest in your people to be able to identify it, flag it, and report on it, that's money not going out the door. So when you look at a combination of the right people, the right processes, and the right technology in place, that's all of the ability to reduce risk. And I think what you're trying to do here is find the balancing act within your organization that you can get the most benefits out of producing, not with the people, processes, and technologies.
Mm-hmm. Sean, I especially like a couple of themes here, and they tied into fraud, and you moved into risk and where the risk is when we have lack of standardization. I'm going to turn our conversation to things around continuous improvement and how do you get to standardization and continuous improvement. We talk about benchmarking. Now, I think a lot of folks in AP hear this term and not quite sure what to do with it. We have many clients who say, yeah, well, we've got some benchmarking data, but I'm always surprised at how few people really know, say, how much an invoice costs to process at their organization. The benefits here is that if we can compare ourselves externally, then we can, put on our hero cape by saying, well, here's how we're doing. Here's how we're doing against another organizations that are similar to ours or other organizations out there. It can be a call of action and become a report card or like a baseline. And, because we only have one AP organization within our company, it's hard to compare how we're doing, and it's hard for our senior financial management to really understand, well, just how well is my AP doing other than, say, perhaps the annual audit or if something bad happens. Part of putting on the hero cape to us is being proactive, and that the accounts payable owner is not just the owner of AP operations, but owner of the AP vision of where accounts payable is moving. And so we have coined this term at PayStream called collaborative benchmarking, which means very more specifically, not just taking and comparing yourselves against the others, but defining goals against that and selecting individual peers to compare yourself. So instead of saying, well, compared to other organizations that have 100,000 annual invoices, or compared to other organizations that have the same employee size, PayStream has developed a peer benchmarking concept to specifically help finance managers compare themselves to other peers in their specific industry. And it's collaborative in that the peers decide which elements they want to share with each other. And what we've learned from our groups that are doing this already in healthcare, utility, and manufacturing is that the teams are able to target future performance goals and use those to communicate their vision plans and set a baseline to compare themselves. So here's an example taken from the metrics that are used in our hospital group, and you can see some of the larger hospitals that are participating. You can see a pretty big difference in the way that they measure their specific labor rates. Here they're measuring these 7 core metrics in this benchmark, but it took some time for this peer group to determine how they really wanted to do it. So they started out with productivity, as I'm going to show you in a minute, but they moved down and they kept going into document systems, receiving practices, into some of those ideas that you were talking about, Sean, around, well, the people, process, and technology, recognizing that, yeah, here's where we are today, but here's where we want to be tomorrow. Specifically, what this team's really like is very specific information about how they compare their direct labor costs. Because in a general benchmark, when you're pulling down a report, say from the Institute of Financial Operations, or even from PayStream's work, it's very much lumped up into a survey-based benchmark. So we can say, well, for companies with revenues below $500 million, the average invoice cost is $4.80. But it's very difficult to say, are we really comparing apples and apples? Because it's a survey-based approach, not an individual metrics-based approach. In the benchmarking studies that are part of these peer groups, each of the participants is completing a very detailed input set of documents guided by an analyst to get at exactly where the labor goes so that they can allocate the labor properly. With that, we're going to turn it over into our next area of becoming an AP hero. Michael, can you tell us about fees and how we can think about lowering our bank and payment fees?
Thank you, Henry. And here's where a few of the concepts that we've spoken about in the last 20 minutes or so can all come into place very quickly. And here's concept number 1, and that is, as a starting point, let's take a look at benchmarking some external costs. It's very easy when you start to benchmark some external costs to get a quick process definition. You can get something that's apples to apples. As Henry mentioned about collaborative benchmarking and benchmarking in general, it's very goal-oriented. It builds confidence. It establishes a baseline. It starts to set up, as Sean mentioned, a culture of continuous improvement. And that culture automatically, we find in companies, reduces risk and improves productivity. Now, Henry was kind enough to mention our association with the University of North Carolina at Chapel Hill at Keenan Flagler. And some of the work that comes out of that starts with the Treasury side and then radiates into accounts payable and also into accounts receivable. And obviously, BancTec has an interest in improving both of those areas. So here's a situation for controlled disbursement. So this would be a check payment that an AP organization is putting out the door. Controlled disbursement is where you have a particular point where that check is going to clear, whether there's a few checks still clearing physically. Many, of course, are clearing electronically through image cash letter. But the Treasury group is able to know early in the day what's going to hit the account. So a check paid for a controlled disbursement item, let's just say an organization's doing 7,500 or 7,500 checks per month. So I have a question, and the question would be, how come some companies might be paying 9 cents for that check to clear, and other companies might be paying 19 cents? I mean, that's more than a 1x or 100% dispersion. And in the panel that's in front of you, the stacked bar charts, you can see that I have those quartilized for you. In other words, the top 25% of folks are paying somewhere between 11 cents and 9 cents, and then the next 25% are paying somewhere between 15 cents and 9 cents, and then the other 50% split into two is the rest of the way. So you can very easily say, okay, well, we're issuing 7,500 paper-based checks in a controlled disbursement account per month, or 5,000 or 10,000, whatever your company is. And what are your bank fees for just the service called controlled disbursement? You can very easily then benchmark there. So here's where you can start to see some ideas about these external costs. Now, this doesn't mean that the AP professional, in conjunction with their treasury director or their controller, goes out with a big bat and beats the banks over the head for a pricing concession, because bank relationship management is much more savvy than that. But it is important to know where you can see yourself in your bank's book of business and where the bank sees you in their book of business, whether or not, for example, they're offering you discounts just to get the paid check out the door. So let's move on to the next slide, and we'll take a look at how we'll see, Henry, as we go. Very good. Thank you so much. We'll take a look at as we see positive pay utilization. Now, with positive pay, Sean mentioned this in his remarks a few minutes ago. Positive pay is where your company, as the AP professional, is sending an issuance file of the checks that you've put out the door. And then the bank, as the checks clear, is matching elements in that file to your issuance file before they'll accept the check as a hard cleared item. Now, there's different flavors of positive pay. Sometimes positive pay can be done at a teller window, which is called payee positive pay. Some banks use even BancTec's imaging technology, and the banks themselves can also do payee positive pay behind the scenes for you in large-scale check disbursements. Sometimes there's some elements of positive pay called, quote, reverse positive pay, where if a check is a suspect item and it's not quite matching, the bank will call you or email you or send you an image of the suspect item, and you, as the AP professional, will make a decision whether or not that was an item that really does need to be paid. A lot of times the manual checks or the off-cycle checks are those suspect items, but if somebody's perpetrating fraud against you, you would know that right away as an early warning system with that concept of reverse positive pay. But the concept, again, of positive pay is the bank gets the issuance file of your items when you issue them. So without question, Decision Gauge, which is the benchmarking consortium out of the University of North Carolina, Chapel Hill, sees that the high-performing companies are 100% utilizing positive pay. So, of course, the questions there are, is your company utilizing positive pay? And if not, it's a good idea to get that project rolling now, so you will be an anti-fraud, anti-risk hero come 2013. It's very rather easy to implement, and those services can also be benchmarked as well, as we'll see in the next slide.
So
and here in this next slide, we see that and this would be in addition to either your regular check paid item or your controlled disbursement paid item. So these prices would be in addition. We see companies, again, let's pick that 7,500 positive pay check band per month. Some companies might pay 9 cents additionally for the service, and other companies might pay, again, 19 cents or so for the service. So you want to make sure that you're getting the best prices, both in the check issuance that you do have and then with the extra positive pay service as well. So here's where you combine external benchmarking with looking like a hero to manage the bank fees, with starting a culture of continuous improvement and putting in place an anti-fraud, anti-risk, or a risk management mechanism. So a lot of these things can come together in just a simple project like this. As we move to the next slide, what we're trying to say here is, maybe in a sense, to everyone on the phone, we're trying to turn you into a little bit of a mini consultant, a mini process analyst, a mini continuous improvement expert in each of your organizations. So here's one of the secrets out of the world of consulting. You know, you hear everyone want to add value, get to that magic quadrant of the value add. That's that upper right quadrant where you see value add. Well, how do you get there? I mean, it's kind of a nebulous term. Well, you really concentrate on efficiency and effectiveness. Now, efficiency is doing things right. Effectiveness is doing the right things. So, for example, if you start with a focus on external costs, just like we did with either controlled disbursement checks paid or also with the positive pay service, but then you start to look at how AP gets the check run out the door, its timeliness, its accuracy, its quality, its reconcilement, now you're being very, very effective. And again, you could start with those external costs as we've just spoken about. And now you look at the full function costs to get a check out the door. Back to Henry's point where he showed those healthcare organizations that formed a collaborative component to talk about the cost of processing an invoice. Well, certainly, if you're paying by electronics or you're paying by checks, that's going to be a component of the full function costs of getting something paid. But the people costs of that, as Sean has mentioned, the process costs, the IT costs, and the other components, and perhaps you have some outsourcing costs in there as well, are all going to be elements that contribute to the full function costs. And that's going to make you very, very efficient in managing and controlling those costs. And when you combine efficiency and effectiveness, you automatically get that value add, that magic quadrant, that upper right quadrant. So hopefully at this point, folks can start to see how some of this comes together, where you start with one particular small insight, but then you can grow it and you can nurture it and get it across into your organization that helps you create this culture of continuous improvement. As we move to the next slide, here what we're saying is, let's start thinking about this with some bigger analytics in your organization. So for example, the Treasury folks are going to be concerned with working capital management. And there's not a lot of science to working capital management. When you think about it, it's kind of easy. And fundamentally, working capital has to do with all the cash that's being utilized as a company operates its business. So if you have inventory, you've actually transferred or changed your cash into having some goods on the shelf ready to go. That's inventory. But you've actually financed that in one way, shape, or form. You had to pay for it to have it on the shelves ready to go. Now, many service companies, of course, have very little, if any, inventory. So only 50% of companies, the manufacturing side and the distribution side, usually have inventory. The other 50% of service companies and some IT companies don't. But in both cases, all companies have an accounts payable and accounts receivable operation. Well, as you're waiting to get cash in the door, the accounts receivable, that side of it is also something that you have to finance through your working capital. And then you can make the right decisions about when you pay your bills, and that's going to translate into an accounts payable or days payable outstanding metric, which is a component of managing working capital. So you can take all of the payments that you know are due, you know what a day's payables are, you divide all that's due to be paid, divided by a days of payable, and you get DPO, or a days payable outstanding. Now you can see here that in the United States, companies tend to be somewhere in the neighborhood of 36 to 46 days in their DPO. So when we've had a lot of the liquidity crisis that we've been struggling with in the last 4 years, companies will say, well, you know what, let's take our terms out longer, let's pay folks a little slower, and we'll get that DPO metric higher. And that would mean you're holding on to a few days of cash. However, that may not be a good idea, because if you are holding on to cash in your payables to mission critical suppliers, you can walk yourself into a problem where that mission critical supplier starts raising rates to compensate for their DSO, their days sales outstanding, on the other side of it. So the issue here is having the right DPO overarching metric that goes to a working capital management strategy, and different industry segments have different DPO targets. In other words, in the world of services, they do tend to pay a little slower. The world of manufacturing tends to pay mission-critical suppliers faster. When you're using transportation and particularly trucking services, you tend to pay those bills even faster, your freight bills even faster. So you have to both know the general metric out of your peer group, and this goes to Henry's point about collaborative benchmarking, as well as some specific mission-critical suppliers that you pay at the right time for your company that gets the best blend of discounts, continuously good service quality, and balances to your cash. So as we go to the next slide, in this concept of improving analytics, we're going to take this slide and a slide that we're going to show very quickly, the following slide, because they're really two observations on the same point. Here's a situation where an organization wanted to look at their travel and entertainment expenses. And this particular organization is about $1 billion company, or 1,000 millions there. And what you see is that for every $1 billion of revenue, the organization had 0.63 FTEs, particularly processing T&E. But look at the scale, or the curves of the scale, with the observable benchmarking points. The blue diamonds are the upper control limit of a mean or median performance, and obviously the lower triangles are the top quartile, the top 25% performers. But when you look at companies that were 30 million in revenue, or 100 million in revenue, or 150 million in revenue, or even 1.5 billion in revenue, you see that a curve developed according to scale. And you even see the top mean performance curve that's somewhat similar. So what's the learning? The company's specific observation in that little green rectangle is out of scale to the 1,800 companies in this particular database. So that means they're spending too much people time on T&E processing. So let's move to the next slide. And with the same concept of the scale curve, you'll see that, no surprise, the company's spending too much money on its T&E processing. And here, the root cause happened to be that they had too many people who were rotating through that particular function too fast, with very little technology and undocumented processes. So of course, they were spending too much time and too much money on processing this component of AP. So utilizing the scale curve techniques for just the cost of the function, where you have labor, outsourcing, systems, and other, that's the slide we're currently seeing, the total cost, as well as that people, or FTE slide we saw previously. When you see that both of those are out of scale, you know there's something to plan for and attack. And the best type of analytics are those which say, here we are at current state, and here's where we need to be at future state, and now what I have is problem evidence and the evidence of an impact of a change. And that's where benchmarking is great, because then it builds confidence that you're headed in the right direction, and it motivates everybody to the problem. So here's just a concept of using these scale curves to help you improve your analytics. And all of the things that we've shared with you today, like these scale curves or the pricing curves, and now this slide when we're talking about span of control, these are good tools that you can readily use almost in a do-it-yourself fashion, and give yourself an introductory way to look like a hero and begin to think about great projects for 2013. Now in this slide, we're looking at the areas of transaction processing and risk management and decision support. And this sample company in transaction processing generally has a 1-to-3 supervisor to performer ratio in transaction processing. That which is managed by the CFO group is a 1-to-3. In their shared services group, it's a 1-to-4. But you can see that the average is 1-to-7, and first quartile companies have 1-to-9. So no surprise here, our sample company in the red is top heavy with managers and supervisors. In risk management, they're at average. That's good to see, but they can move to change their staff mix by getting to a 1-to-6 and get themselves into first quartile. And then interestingly enough, in decision support, and this is where folks are producing ad hoc reports or doing a little bit of business performance analysis or some specialized projects, our sample company was 1-to-2, the average is 1-to-2, and interestingly enough, that average spans out into first quartile at 1-to-2. So they had the right mix of people who were wanting to perform these functions, but they weren't looking at the right things to benchmark or to improve upon. And then risk management is anything that has to do with security, controls, compliance, adherence, and anything to do, believe it or not, with forecasting, because forecasting is really an element of risk. So here's a span of control, do-it-yourself benchmark report that you can very easily take a look at your AP function or any of your functions in your company about transaction processing or risk management decision support and get a feeling whether you've cut to the bone or perhaps whether some distribution of folks and their supervisory and performer capabilities should be realigned in 2013. So we can go to the next slide. Now here's where we can take a little more detailed analysis of how folks are spending their time. So you have two panels here in this one slide. One is management staff allocation and the other one is professional staff time allocation. Now management is somebody who signs the review of a performer. So for example, if Sean reported to me and I sign his review and authorize his raise, then I'm Sean's manager. If Sean has no one reporting to him, but however, he's performing a number of integral jobs in the accounts payable department, he would be a professional. So what you don't see in this panel is the actual transaction processor. Here we're looking about the managers and then a professional who would be doing some decision support or trying to help out management or doing some projects or whatever the case might be. So, if we could stay on that slide, Henry, the previous one on page 21. On that slide, what we would want to take a look at, it would be probably two slides before this one, there we go, is look at the professional first on the right panel. In the sample company, the professional is spending 70% of their time still processing transactions. But the goal is to have them in first quartile where 50% or less of their time is actually processing transactions. So that really, when you think about it, picks up over 50% additional good things about risk management and decision support that the company needs. So we need to get our professionals out of the transaction processing business. But look at the news on the management side, the left panel. The sample company had their managers, almost 90% of their time, still processing transactions. Whereas first quartile companies, a manager is going to spend less than 40% of their time processing transactions. Actually, still, that's high if you ask me. Maybe even top decile or top 10% would be good to look at. But here's the point. As a manager or professional on this call, you can do a quick time and motion study and find out where you're spending your time. And if you have your time buckets somewhat similar to one of these, you can get a sense of whether or not you need improvement. So remember, transaction processing is as it sounds. You're actually processing a transaction. You're collecting data, validating data, making sure the data about that transaction is accurate, double checking it, whatever the case might be in the transaction. Risk management is exactly what it sounds like. So you're making sure that quality is controlled. You're making sure that a reconcilement is performed. You're making sure that compliance and adherence is taking place. You're making sure that an investigation is concluded successfully. Decision support is where you are providing some sort of analytics. And then, of course, in the manager side of it, managing the other folks and managing the function is what's called function management. So now you have the definitions of those four components. You have some sense of benchmarking those four components. You plug in your own sense of a quick time and motion study, and you can go to management and say, hey, I'm spending way too much time in transaction processing. Let's start to talk about how I can remediate that. And maybe there's an outsourcing situation that could be helpful. There could be a systems or technology fix that could be helpful. There could be a combination of process and outsourcing changes that could be helpful. There could be the need for some more or detailed benchmarking to help further identify the problem evidence and then get you to the good impact evidence. But this is where you look like an analyst, a mini consultant, and that's what our companies are looking for, and that's what makes you a hero. So we can go to the next slide. And here is where you can take the 5 components that we visited with you today about AP fraud, AP risk, AP benchmarking, managing your fees, and then performing some analytics, and give yourself a rating. Just give yourself a rating on a scale of 1 to 5, or give your company a rating on a scale of 1 to 5. And here's just the company that in working with them in the past said, well, in managing fraud, we'll give ourselves a 4.2. In managing risk, we'll give ourselves a 3.3. In managing AP benchmarking, we'll give ourselves a 3.6. But in managing our fees, we're only going to give ourselves a 2.3, and in managing analytics, a 2.0. And what's great about this radar or pentagon type of chart technique is you literally see the flat spot. You really want your scores to be all 5s, and you want to be balanced right to that green line or the end line of the radar chart. But here you can see that the analytics could be used to help in the fee management. So for example, let's say that the analytic function was still rated at a 2 and the benchmarking was rated less than a 2. Well, there, the analytics could be used to help in a benchmarking effort. In other words, both of those need to be improved. So that's why I love this technique. And when I'm sure folks like Henry or even when folks like us at BancTec help companies from a more consulting perspective as opposed to BancTec actually providing services, we use these types of techniques with folks that are considering services because it helps them identify right away ways they can improve and gives a nice snapshot about putting things together for a concise plan of action. And that's the type of hero we want to turn you on and be involved with inside your companies. So as we move to the next slide, this is a bit of a summary for us, and back to Sean's point. Sean made a wonderful point about people, process, technology. Well, in the right panel, where you see coordinated efforts, when you're looking at your systems and your IT, when you're looking at your people and your organization, and you're looking at your process redesigns all at the same time, you're going to get 100% of the benefits you expect. But if you fragment those efforts, the right panel, you're going to lose 30% of the benefits you expect. And that's one of the things that folks, and we've learned in all our efforts, and Sean as a practitioner, me as a practitioner, we've seen this over time, that it's true. If you just go with an IT fix, or you just go with a process fix, or you just go with a redesign fix, or you just go with an outsourcing fix, you'll lose 30% of the benefits you expect. You know, when it comes to outsourcing, it's about intelligent business process outsourcing. It's about being intelligent about that with the folks that you choose. When you're working with your systems folks, it's about making sure you're balancing your process redesigns and your people and organizational changes. All those things coming together. That's the insight to continually balance that people, process, and technology, as Sean mentioned earlier. So Henry, I think with that, we're ready to turn it back to you for some questions and some summary comments. and perhaps
Great.
a little more dialogue.
Wow, fascinating concepts from the experts. Thanks so much for those comments, Mike and Sean. This is great. We're going to do a quick poll, kind of gauge what you're thinking about in terms of goals and how hopefully we've given you some ideas, and then we're going to allow you to ask some questions, and I've already got questions coming in. So based on what we've seen today, are you thinking, 2013 you should be, putting on that cape and becoming the hero? Is it going to be around benchmarking? You think you're going to get more of the lift and the heroship from, or is it going to be taking care of your existing business, managing fraud? For each of you, of course, there's different themes that are going to drive innovation and to push you forward, and each of us needs something different. Some of us need to work on one element or another because, as Mike so nicely shared with us, that radar chart shows us where we're flat, where we're not reaching the pinnacle of where we could be, and it kind of drives sponsorship and innovation. All right, I'm going to close the poll, and we're going to share the results in just a moment. I also want you to learn how to ask a question. We have a questions tab, which allows you to type in questions, and some have already been coming in. And you type it in, it comes to me, and I'll read it and get our faculty to weigh in on it. Wow, look at this. Again, a three-way tie, and then risk and fraud is less interesting. So benchmarking, visions, and existing projects. So many of you already have stuff you're working on, but I'm glad to see so many of you are saying, yeah, we need to be working on benchmarking and establishing visions of where we can be. And I hope that Mike and Sean's commentary has given you some sense of where you can take your business and how to be the AP hero. It's the time of year where we start thinking about the future. So let's ask some questions of our expert panelists. Mike, the first question comes from Bill. And Bill wanted to know specific examples. Do you have some case studies of where these themes can be put into action, or where are the benefits that have come out of that? In other words, give us a little bit more ammunition to get our team on board.
Well, I bet you Sean's got a couple as well, and let me start off with one that I know of, which is a particular company that was issuing a little over 10,000 checks a month. Started with this concept of taking a look at all the bank fees that were involved in the AP process. And lo and behold, they were able to find, in just issuing a little under 11,000 checks a month, that by benchmarking their fees, they wound up saving about $1,100 a month, or obviously a little over $13,000 a year in bank fees for just that which was involved in the AP process. So the success of that project then gave the project lead the opportunity to take a look at the full function costs. Now here they used some data from your organization, Henry, and PayStream, as well as some data that was out there in the public record. And what they did there was they found that their total invoice processing cost was above $7. So they took a goal of saving 30% out of that as a first line goal, and then as a second line goal, they wanted to save another 30% from that subsequent baseline. So when you think about the compounding effect of that, they really wanted to produce really savings of almost 70%. They achieved 50%. They got their total invoice cost down to around $350 or so. And they did that by implementing two things: a lot more technology in the house with a workflow management system, and then they went to a provider like BancTec to get involved with what we called invoice processing on the front end, where the invoices are captured and imaged, documented, scanned, indexed, and then moved through an automated accounts payable workflow management system. So their net savings turned out to be 2.5 FTEs, And those particular savings on 2.5 FTEs was $144,000 for fully loaded staff. And they did not terminate those folks. One went into the accounting function, the other one went into internal audit. So between starting with that easy project at benchmarking fees gave them momentum to put in a modest workflow combination IT and outsource project, which resulted in an almost $160,000 save.
Wow, that's impressive. I liked the way you started. It was just, hey, transaction saving on your bank fees. And, sometimes we just don't think about those basic things. Sean, did you have a similar case study or some kind of a case of where organizations have been saving around fraud, risk, benchmarking? Sean, perhaps you're still on mute. We can't hear you.
Yeah. There we go.
Sorry about that. Yes, I was on mute. Yes, in my personal experience, I was actually tasked with reducing costs of $125,000. And, the last 10 years we've been through cutting to the bone and staff, so I had to come up with another way to look at it. And just quickly, I think to look like a hero, you look at where are you spending your money without affecting other departments in a disproportionate way. So I looked at two areas: FedEx charges and remittance of the expense reports, and did a quick analysis. And it took about not even 5 hours to do this of total time over 1 week to do an analysis of how many FedEx packages are receiving on a weekly basis, and how many remittances are we doing for putting in the mail to send out that remittance notice to our employees. And lo and behold, we found that we were getting 150 FedEx packages a week, and we were producing over 60,000 remittances over the year, just to say that we sent you back $100 in your bank account. And by eliminating those two aspects in our process, we saved over $135,000, and we were able to prove to senior management that with a little know-how and a little analytics and given some time, we can reduce operating costs without just looking at people, and that kind of gives you a little cachet moving forward. That was such a small project, and it was a quick analysis, and we were able to implement very quickly. But it gives you that cachet when you go up and you want to get maybe put in an automation process, where senior management says, yes, you know what you're talking about. You have the tools, the techniques, and the ability not only to research it, implement it, and then continue to see savings years over year.
Wow, that's fantastic. My specific example on the benchmarking side was how impactful it was for a client of ours. About 150,000 invoices, and it really had never figured out what their cost per invoice was or where the real opportunities were in AP. And they brought us in to do an assessment. And what their hypothesis was coming in was that it was going to be all about savings on the labor side. And what we really found out after doing the analysis was that there was such angst within the organization. There was such a broken AP process. They never surveyed the end user clients of theirs, the approvers, the people in the field. And so what they found was those folks, even though they had a centralized AP process, were subterfuging the system, and I know this is very common, by having invoices sent to them. So we said, well, why are they doing that? When we studied this, we found that 55% of the invoices were going to the regional departments and the individuals rather than going to AP first, which means, of course, they had a visibility problem. And it turns out that we were able to prove that those invoices that were sent to the departments first ended up costing them 3 times as much to process, because there was a lot of back and forth, a lot more exceptions from that group. And so we studied, why is that? Why are those people not wanting to send to the AP? Well, it was basically a lack of trust in the system, and that they hadn't developed good communication, materials, educational, their old policies on the web that they had, an intranet site, were more than 14 years old. They hadn't been updated. So people didn't trust it. And so it was easy to share that once they were able to bring those managers and approvers from the field closer to better understanding, showing them that they cared about improving the process for them, they were able to drive out their costs, both internally in AP and for the field staff who were approving invoices. So it was kind of a little bit of a twist on where the market was. I have another question here from Susan, and then this will be our last. Well, there's another one from John here who's asking about, are we going to have received the slides? Yes. The slides will be mailed available to all, as well as a copy of these. This session has been recorded. If you want anybody else to listen in on it, it'll be available at BancTec.com. As well as we have a new report to share with you. PayStream has just published its annual Accounts Payable Outsourcing Report, which studies outsourcing as a business process. And the surprising facts about learning is that outsourcing is no longer just for Exxon and giant companies that are in the Fortune 100. What's the big trend in outsourcing is that it's really coming very well into Fortune 1000 and the middle market of size of companies. We even have a client that has outsourced their accounts payable capture, and they only have 50,000 annual invoices. So I make that available to you on our website at PayStreamAdvisors.com. That report is free. And our last question here is for Mike. So Mike, if you were thinking about the one best idea that you saw in 2012 that was implemented in your client, and it built into one of the themes that we've already been talking about, what would it be? What would you leave our audience with?
Without question, it is framing benchmarking in a bigger frame. And the reason why I say that is for years, I have been such a devotee of benchmarking, but it's like benchmarking for benchmarking's sake. And the best thing I saw in 2012 was where organizations taught me something, and that was they're using benchmarking as a tool to gather problem evidence or impact evidence to in turn go out and get a goal. So benchmarking itself isn't the goal, but what it is a tool to achieve a goal of efficiency or effectiveness. And then it hit me maybe 18 months ago, and I saw it play out all during what we've been seeing in this crisis of trying to do more with less sooner, as we've been even squeezing more out of our workflows and people and processes, that the issue is about how to be efficient and effective. And you know, we talk about being efficient and effective, but it's like, my goodness, how do you get there? I mean, what's the specific ways to get there? Well, you start with something small, you gain that momentum, and then you get into bigger analytics. And that's where benchmarking is a tool to achieve the goal of good analytics, which in turn achieves a goal of becoming efficient and effective by reducing costs or improving processes. When folks frame benchmarking differently, they're jump-starting and getting great results. And that's something that really impressed me in 2012.
Well, Michael Alfonsi, Vice President and Managing Director of BancTec Financial Transaction Services, and Sean O'Neal, Director of Financial Process and Transaction Service at BancTec, thank you for sharing your perspectives, real-world advice. We'd love to hear from you. I know we've had a lot of great questions. I'm sorry we didn't get to them all today. From PayStream Advisors, this is Henry Imes. We look forward to seeing you on a future webinar. Thanks for joining us today.